So, all right, fine. Now I come to my second part of, or the third part. I had the professional life, I have the business life, and I still run a business. That's okay. And I, therefore, 97, 90, 95, I first time saw some money. And I decided to put majority of my money in the business, saying, listen, I'm doing it for my personal satisfaction or gratification to be active and so on. And I put part of majority of my wife's money into investment. And I knew nothing at all about investments, and I put them in fixed deposits, certificate of deposits, and so on. And somewhere around 97, 98, we had a neighbor whose son was working in a company called Satyam Computers. So I said, yeah, this guy is working in Satyam Computers, let me invest some amount of money in Satyam Computers. And then I realized these stocks were going up virtually 5% every day. And I said, this is very good. And I decided, therefore, to put majority of my money into the so-called software stocks. And this particular point of time, these stocks were going up every day, and I was a very wealthy man. I was a genius, and I did not know anything wrong could go on. So, in the, let's say, Satyam or Infosys was listed in NASDAQ. And every day I would compare the prices of Infosys in India and compare its price to NASDAQ, and I'd find that Infosys was being quoting a 30 to 40% higher valuation in NASDAQ than in India. So I said, the Americans are smart guys, we are the stupid guys. If they are valuing it at 30% higher, then I have got it wrong. And I therefore had this money, and sure enough, let's say if I started with, 6 rupees, let's say, okay, 6 or 8 rupees. By 2000 March or April, they had become something like 11 times. And I was a genius. And then came the dot-com bust. And the stocks fell and fell and fell and fell. And at the end of it all, what was left was 25 or 30 rupees. So it started at 6 rupees, and I ended up by 27, 28 rupees, but I had still made money. So this particular investment group, where there's another very famous fund manager called Naren, he was also a member of it, and he was on the camp which felt that the software stocks were highly overvalued. He was also right, they were overvalued, but I hadn't done badly. I'd also made my money 3 or 4 times in those 2.5 years, which was a mind-boggling CAGR. And then I said, I don't understand stock market, and I therefore decided to put back my money into, back into fixed deposits or debt funds and so on and so forth. But that interest in stock market was still there. And somewhere around 2003, 2004, I decided to go and buy a flat in Delhi from a company called Unitech. And I went to their offices. The offices were, most builders have very good offices. The project was nice, everything. So I decided to investigate a bit about the company. The company was available at a valuation of about 100 crores. And Citibank and some other 2 or 3 very major foreign fund managers owned 5% of the company. And I said, look, the office itself is worth 100 crores. I'm sure it's worth a lot more. And I decided to put some small sum of money, maybe 5 lakhs or 7 lakhs of rupees on that particular thing. And forgot all about it. Those days, I was not watching the portfolio on a daily basis and things like that. And therefore, in 2008, all of a sudden there was this big boom on the real estate stocks. And this 5 lakhs or 7 lakhs had become almost 25 crores. So therefore, that was a great thing. I was also lucky in many other similar things which happened in this particular period. My wife used to bring a product called Fem Home, which was a bleach, and I saw this and I said, listen, this is a company which is probably will be acquired by somebody, having sold my business. And sure enough, it got acquired by Dabur, and the money became 3-4 times. So I was perhaps lucky. I was also following what Peter Lynch calls seeing what sells. Similarly, there was another product called Neutralite, which my wife brought. I found out which company was making it, invested in it, became a 3-4 bagger. So the net result was I did particularly well from the period 2003 to 2008. And 2008, I built a case. I said, listen, everybody said Indian markets are highly overvalued. And I said, what are we talking about? Indian markets are not overvalued. Indian markets is only the beginning. A small company in America dealing with every product, niche companies are worth billions and billions of dollars. In India, we're still talking about these companies available for 100 crores or 50 crores or 70 crores or maybe 500 crores. India is going to be a country as big as America, and therefore this is going to be this. And how wrong I was. 2008, the so-called Lehman crisis happened, and stock markets fell all over the globe. The Indian small cap index from 2008, whatever time it did happen, I think it peaked around January 7th or 8th. And by March of 2009, the Indian small cap index had fallen by 90%. So if you had 100 rupees by March of 2009, despite everything that, we talk about the big Indian story, if you had invested just in the index itself, you would have lost 90%. I had lost 75% of my wealth. And fortunately for me, I managed my wife's money. She does not ever ask me, what is the portfolio worth? Where have you invested in it? And, our lifestyle has not changed whether we have the money or not. So therefore, that is okay. So nobody ever asked me whatever it is. But, we held on to the business. And in March of 2009, I said, listen, I think this is just too much. I have lost too much money. And I started selling it. And when Rajiv Khanna starts selling, the stock market starts going up. And therefore, I was quick enough again to get back to the market. And therefore, I didn't, life has been very, very kind. So let's say if I started with 6 rupees, today it's worth about 2,000 rupees. So therefore, it's a mind-boggling CAGR. Do I have the capacity to do so? I don't think so. It was a bit of luck, a bit of everything, but that's how well I have done. So that's what I'm writing. People put me on some sort of a pedestal. People keep writing about my portfolio and so on and so forth. I was invited by Kotak. I normally don't give interviews at all on my stock market, this thing. But I was invited by Kotak, and since I requested them from charity and they'd given me the charity, I could not refuse them, and so I had to sing for my charity. So I went there and I said, listen, I thought I will call this talk of mine as the power of stupidity, because I was in certain cases far too stupid, not knowing when to sell a stock, and therefore it held on and it did well. There is some merit in what I'm trying to tell you. There is a very large fund house called Fidelity. And now Fidelity at one point of time decided to find out who the best investors were in their entire portfolio. And they listed out some 50 to 70 names, and they said, listen, let's go and meet them. What makes them great? And they went there and they found most of them were dead. So therefore, this buy and hold does work. But on creation of wealth, there is something that you must hear, and this is the power of compounding. And this is the main thing in life, and I think power of compounding, Albert Einstein is rumored to have said that it's the 8th wonder of the world. And let me elaborate. It was around 1625 or 1630, the early Dutch settlers came to America and bought the Manhattan Island for a princely sum of trinkets which were worth about 24 US dollars. The entire Manhattan Island. The big thing in the stock market that is talked about is who got the better deal. They bought the Manhattan Island for $24, so therefore anyone will say, listen, Manhattan Island is worth a lot more. But if you put in that 24 US dollars for this period of 390 years or whatever it is, at 10% interest, today you would be sitting on $150 quadrillion. And a quadrillion is something, a billion is something which is followed by 9 zeros. A quadrillion is something which is followed by 15 zeros. And with $150 quadrillion, you can today buy almost all the assets in the world. So therefore, this power of compounding is something which works amazingly well. And therefore, first thing that you need to do is, if you're planning to start investing at a young age. It helps a lot. I started at the age of 51, 52. Please, all of you start investing, and start investing now. If you want to create wealth, there is nothing better than the stock markets, because it's a puzzle and you can do it. If you go and see the list of the top 200 Americans in America, at least 30 of them would be from the stock markets. These are guys who have the capacity to risk, and they have created great wealth. I'll talk to you on some of the great investors now. In India, we have this guy called Rakesh Jhunjhunwala. Now, Rakesh Jhunjhunwala is a chartered accountant and started with virtually no money at all. But he was a great investor, capacity to take amazing amount of risk. Today, he's worth almost $2 billion. And there is an interesting conversation that he had. He said, when I got married, my wife was relatively from a well-to-do family. So she used to ask me every now and then that when are you going to get an air conditioner? And he says, I didn't know at that particular point of time when I'm going to get an air conditioner. But then he said there was a budget of Madhu Dandavate which came in, and everybody thought that Madhu Dandavate is a socialist, and I thought differently. I had worked out some equation of what caste or what type of family background that he came in, and I invested heavily at that particular point of time. He says that evening, the day the budget came, my wealth was 4 crores of rupees. I reached home at 11:30 at night. That particular evening, my wealth was 20 crores, and I told my wife Rekha, ab AC aa jayega. So this is in India. I don't think, there's only one guy who's made money in the stock market, which is worth $2 billion, and none of us are close to $1 billion at this particular point of time, the next rung. So Rakesh Jhunjhunwala stands out for an extraordinary risk taker, but he has created that amazing wealth. We may not think much about his current set of investments, but nobody can take away that success from him. So therefore, that's one area who is a great thing. Warren Buffett, you people have all heard. He's an amazing investor. He was lucky enough not to get into Harvard, and therefore he went to Columbia University. There was this great professor called Benjamin Graham who was teaching there. Benjamin Graham gave an A grade only to one person in his life, and that was Warren Buffett. Okay, so therefore Warren Buffett is an outstanding investor. In stock market circle, there is a theory called the efficient market theory, and people have won Nobel Prizes for this and so on. And there is a point of view that, listen, over long periods of time, you cannot outperform the market at all. Now, Benjamin Graham wrote a book called The Intelligent Investor, and I would urge every one of you to read that, because I think it's a great book. And in the present edition of The Intelligent Investor, Warren Buffett has written a chapter about various people who trained under Mr. Benjamin Graham. At least 6 or 7 of them, all settled in different parts of the country of United States. They had outperformed the market very, very substantially. Therefore, he debunks this entire theory of the efficient market. But Warren Buffett is an amazing guy. But there are others as well. There's another guy called Peter Lynch. Now, Peter Lynch is somebody I follow to a very great extent. He was a fund manager. Over a 15 or 18-year period that he managed funds, his CAGR was much higher than Warren Buffett, but he worked very, very hard. He had 1,000 companies in his portfolio, and without computers, he could track it. And his books are extremely interesting. I would urge every one of you to read. Then there's another guy called George Soros. Now, George Soros is, again, absolutely a remarkable guy. He was a refugee from Hungary. He did his doctorate in philosophy from, I think, Oxford or Cambridge. He's written a book called The Alchemy of Finance, and I request you to read it. I've tried to read it 4 times. and I have not understood a single word of it. Absolutely none at all. But George Soros is known for various things. One is the time that when he broke the Bank of England, and the way it works is this: he felt that the British pound was overvalued, and therefore the British government will have to devalue the currency. And the British government did not want to devalue the currency. So Mr. Soros kept selling the British pound, and the British government kept buying it. But the pressure of George Soros was so high that British government could not take the pressure, and therefore the government decided to devalue the currency. On that particular one day, Mr. George Soros made £1 billion. That's a lot of money. A lot of money. And what is not known is that when he made that £1 billion, he had borrowings of close to £7 billion. And that's how big money is made. You need to take big time risks to make big money. So George Soros is amazing, absolutely. He had a guy who was working for him. George Soros would every now and then get a successor for himself, a guy called Stanley Druckenmiller. So Stanley Druckenmiller one day said, listen, I had this particular position of close to $500 million on a particular thing which I felt was going to do very well. And Soros walks in and hears him out and says, listen, okay, yeah, that's a good position. And in a fraction of a second, he says, double the position. That's how quick George Soros is. He's worth about $28–30 billion. At one point of time, Stanley Druckenmiller told him, listen, I can't work with you and I'm leaving. So George Soros says, no, you don't leave, I will leave. So George Soros goes off to Europe. His pet hate is the communists. And therefore, for next 5–7 years, he was working, trying to fight the communists all over. And he left everything to Stanley Druckenmiller. Of course, he came back. Stanley Druckenmiller is also worth billions of dollars today. But these are the interesting guys. And since most of you are great, mathematicians, there's another guy called Jim Simmons. Jim Simmons was a code breaker in the American army, which meant that he broke the encrypted codes, how messages would be sent, and he got into trouble because he was not in favor of the Vietnam War, all that, but he at some point of time decided to leave the American army and set up his own hedge fund. He did not employ a single guy from the stock market industry or from the Wall Street. He brought in pure mathematicians to do so. And he created certain algorithms. And what he has done over a 15 or a 20-year period, he has compounded money at 98% CAGR for the period of 20 years. This is a mind-boggling performance, absolutely. So if any of you like mathematical challenges, please emulate Mr. Simmons. He's also worth $20–25 billion. You understand what $1 billion is? These are mind-boggling figures. $25 billion would put you in the same league as Mukesh Ambani, almost, who's worth $40 billion, is worth 1,50,000 crores. So therefore, that's the sort of money you can create in the stock market. Then there's another guy, again, I would like to, one last one, and that's a guy called Paul Johnson. Now, the time that we're talking about the Lehman crisis, there were some people who realized that the real estate industry in America was going to bust. And one of these guys was a guy called Paul Johnson, who read a hedge fund listing. The conventional wisdom at that particular point of time is that, look, real estate industry has never done this. Property prices keep going up and keep going up. Now, somebody found something called credit default swaps, and Paul Johnson bought it. And he was a loner, absolutely. He would walk into the office, and it was against all conventional wisdom that he was buying these credit default swaps. If things were so bad that his investors said, what the hell are you doing? He was spending other people's money. He could not face his own staff. They thought there was something terribly wrong with him. And he would come to the office and he would lock himself inside the office so that he did not have to face his staff. And till the 15 days before the so-called Lehman crisis happened, the entire Wall Street was saying, look, everything is hunky-dory. And then this entire collapse does happen, and Mr. Paul Johnson's company makes something like $12 billion in 1 year, He himself makes $3 billion. So if most of you, if you want to do that, of course that doesn't cover him, but there's another book, or another movie that's available called The Big Shot. Yeah, that's right. It's available on Netflix. Please have a look at it. But again, but these are about different set of people, but I think it's absolutely amazing. Okay, two things. The best definition that I've read, and I think which should be followed, none of us can follow it. Best time to sell a stock is when it is not a buy. Theoretically speaking, when you see a company and you say, listen, it's a great valuation and I need to buy it, but at some point of time the valuation is written up and you say, no, I don't want to buy, then theoretically you should be selling it off and buying something else which is better. But I don't do that, because markets very often tend to take it to great valuations and so on, and therefore, for example, I stopped buying Amaraja batteries at 2,500 crores, but I didn't start selling it necessarily. And the market capitalization went to 13,000 crores. Okay, I thought it was, I remember there was a stock called TTK Prestige, and I bought almost more than 1% of the company, and I started buying it at 60 rupees, and I kept buying it at up to 400 rupees. And at 450, I thought it had reached a fair valuation. Today, the stock is worth 6,000 rupees. So I therefore wait till the stock stops performing. I today look my portfolio as something which is being pulled by 500 horses. And I therefore tend to exclude out the horses which are running slowly. And therefore there's a bit of a technical that I did, not the squiggly charts. And as Lynch would say, listen, all these guys say great things, but do one thing, take out 100 of these charts, show it to a technical experts, and tell him that, listen, you think the stock will go up and go down, the odds are there 50-50, they will get it right. So therefore I don't follow that, but I think that's the best definition. I don't follow it. I follow it when I find something better and this stock is started tanking, or alternately, I also at that particular point of time see whether it's worth a buy, and most of the time the valuations have anyway gone through fairly high figures, therefore you do this and you get into something else. For example, today I've been selling lots of stocks which are not doing well and buying Rain Industries, because I think it will give me the next 10%, and to me a 10% is a great return in this sort of a market. So, but generally speaking, if you want to create great wealth, you got to buy good businesses. You got to find good managements who have a vision, managements who will make the company grow faster. Now, I don't have the skill sets. I'm not a great businessman, to be honest with you. I do this to remain alive, to the thrill of doing whatever I do, whether to make cheese or ice creams or so on. It keeps me busy. But if you can find the person who you think has a vision, or if you have the vision, please go ahead and do it yourselves. But if you don't have it, then I think stock market is the best place. A lot of people think stock market is risky. I disagree with them fully. Look, if you ask anyone on the man on the street and say, listen, how are you going to make money? He'll say, listen, I need to set up a business. Now, all of us don't have the resources to set up a business, but what is available in the stock market, both India and globally, are some of the world's best businessmen, and you could partner them. And therefore, that's it. You should not look that, listen, I bought a stock. You're buying a piece of business, and therefore you don't need to be a genius to recognize this, that if Indian economy is worth whatever it is worth, $2 billion, that thanks to all of you, this entire country is going to be worth, the economy is going to be worth $5 billion. Therefore, India is going to be a great place to create it. Now, if you have the skill sets, go ahead and set it up. And if you don't have the skill sets, partner some of the best businessmen in the country, and therefore you own businesses. I don't see myself owning a particular stock. I see that I am a partner to Rain Industries. Here is this great guy who can create a global empire, which I don't have the ability to do so, and therefore I'm partnering him. And as long as he does well, I'm okay. And there's one big advantage. I run a business and I'm looking for a customer. I'm 71 years old. For the last 1 year, I can't find a customer. But when you partner a guy like this, if he's not doing a job, you can get out of the business in fraction of a second and get on to another business which is far better. So I think it's an interesting thing to think about, but if you have the ability, and I'm not saying that you should all get into the stock markets, but if you're looking for the best salaries in this world, then the place to be is the stock markets, because it's the only business where one man can create billions of dollars. I run a business, I need to have 500 people, 1,000 people to create wealth, but this is an amazing thing. I'll be honest with you, I don't understand it very much. But those who invested, I've done well. We do not know when the regulators will put a thing on this, whether you're on the right side of the law, the wrong side of the law. In India, you'll be very, very careful doing that. But, it's something which, if you invested early and you made money, I realized one thing, never argue with success. Therefore, if somebody's made $1 billion, I say hats off to him. I don't understand it, so I'm okay. But look, I don't understand. These are stop losses are very technical terms, but it's a good thing to happen. And I do follow a certain degree of stop loss, and my stop loss works not purely. I'm not a day trader. I don't trade on a daily basis. I don't have the skill sets for that. I'm not saying it doesn't work, but let's say, buy a particular stock, and the stock over the next 2 months or 3 months goes down by 15% or 17%, I normally would exit the position. And the reason for this is that I feel that something was wrong with my thesis, that others have not bought it, and therefore there was something flawed in my logic, and I think it helps a lot. I think what's important in the stock market is not necessarily to find the winners, but to make sure that you weed out your losers much faster. And I think that works a lot more. The majority of my time goes around making sure that I remove my losers quick enough. And if on the other hand, at some point of time, they again start rising, then I again enter the stock. So I suffer from something called sleep apnea, which means I can sleep for about 5 hours at one particular point of time, and then I have to stay awake for about 2 hours. So I'm awake every night at about 3 o'clock, and 3 to 5 I'm awake. And therefore out goes my email every night to my broker saying, please sell the following stocks. And I therefore learned this out. I disagree with Warren Buffett that you should buy and hold. If things that are not doing well, I need to get them out quickly enough. Yeah, I'm afraid I do not use technicals very much. I have some idea if the stock is going up or going down. To me, that's too much of a micromanagement. But I do believe there's a guy called William O'Neill who's written some very good, interesting books, and he follows something called the CAN-SLIM model. I follow it intuitively. I do not follow it rigorously. It's worked well for me. But sometimes you get it wrong, but you start looking at it, you start looking at the business model over a period of time, you get a certain experience, but things can go wrong sometimes, and it has happened to me particularly with Satyam Computers once, and I have never traded, as I said, and it was only in case of Satyam Computers I bought what was on futures or something like that, and because I said it was a no-brainer, because the company was available for 700 crores or 1,000, I don't know what the figures were, and the company claimed that it had cash of 4,000 crores or something like that. So I, let's say, invested 1 crore of rupees, and in 5 days' time, that was worth 1.5 crores of rupees. And I said, listen, this is the first speculative income I've ever had, and therefore I'm going to buy myself a fancy car. And but next day, this guy, that very night, he announces that, listen, I'm sorry, all my reports were wrong, and I lost almost 70-80 lakhs of rupees. So that was it. That's part of the game. These things do happen. But generally speaking, you develop an intuition. You see this thing. You understand what business is doing well. but all of us can make mistakes despite that. But that's it. I think with experience you'll gain that. Therefore, this is it. Now, what are the life lessons from my whatever journey, my roller coaster journey? Well, first, obviously, I think all of you live your dream. You only live once. Please go ahead and live your dream. Whatever you want to do, do it. Please. That's the first thing I would urge every one of you to do. I found this lovely quotation from George Bernard Shaw. A life spent making mistakes is not only more honorable but more useful than a life spent doing nothing. So go ahead and do whatever you want to do. Please make your mistakes, live your dream. That's one. The second thing is give your life a best shot. You're going to live only once. Why should you succeed, to be honest with you, and what should be the metric for success? I don't think the metric for success should be the amount of money that you make. I think every one of you has the ability to success. If I see my driver, he is successful. If I see most parents bring up their children well, they are very successful. Therefore, the metric for success cannot be money. I mean, if you're doing research and you're doing damn good research, I think you're far more useful to the country or to anybody else or to the society than a guy who makes money. Therefore, I think the first thing we must remember that making money cannot be the metric for success. The metric for success is how well you've done based on your potential. We were lucky. We went into IIT. We were born in a particular type of family. So therefore, don't look down at a person who hasn't done well. Every man has a story to tell, and every man is successful who works to his full potential. And I think that's important. But you must attempt to be as successful as you are, because your parents expect it from you, your institution expects it from you, your country expects it from you, and the society expects it from you. Therefore, please do not waste your education. Please give life a best shot. You're going to live only once. But on success, there is also an interesting quote, and I would read it out for you. What is success? As I said, success at the age of 4 is not being in your pants, right? Success at the age of 12 is being a great cricketer or a sportsman. Success at the age of 18 is having a boy or a girlfriend, right? And success at the age of 50 would be to be on top of your profession. Then when you reach the success at the age of 75, again, it's your ability to make it with your wife or companion. And then at success of the age of 90, it's again not being in your pants is also a great success. So that's it. So work hard, and there is a Hindi saying called "Khudi ko kar buland itna कि खुदा पूछे तेरी रजा क्या है." Basically translated, it means, oh man, raise yourself to such heights that God asks you what you want. There is no other, I don't know of any other way. Unless you work very, very hard, you're going to be successful. Bring all the passion that you can do to your job, and even if things are not good, you will gradually open doors. So therefore, you must be successful. Everybody wants you to do that. My father was in the judiciary, therefore we used to be in Punjab, and I would shift houses every 2 years or 3 years. I had my early education in Firozpur, Ambala, and then finally in Delhi. And it was in those days, by the year 10th, my father got transferred to Chandigarh, and therefore I had to stay with my aunt, and I did my the 11th class or higher secondary, it was called, in Delhi. And since everybody else was applying for IIT, I also decided to apply, knowing that maybe something would happen, but it was more because others were applying. I was a below average student in the family, or above average student in the school, but nothing great about it. So when I went to IIT, I found that everybody had taken coaching classes and so on and so forth, and I was very, very sure that I wasn't going to get into IIT because I had done none of those things. I was so sure about it that there were 4 exams at that particular point of time, and the final exam was on 2 to 4 in the afternoon. It was probably an English exam, and I had fixed up with my friends that I'm going to go and see a matinee show at 3:30. So I went into the final hall, and I found that I had misplaced my admit card. And I very despondently walked back to the place in Delhi, which was about a kilometer away on a dirty Delhi road, and despondently looking down and seeing maybe I'll find that bid card. And I was just plain lucky enough to find that bid card, and that's how I finally managed to write the exam. But of course, I did go and attend the Met show, so therefore, that's how seriously I was taking. I thought were my chances of getting into an IIT. And then, as luck would have it, we were holidaying in a place called Dalhousie, because in judiciary you have 2 months vacation. And somebody was nice enough to send us my interview call, and it reached in Madras, in Dalhousie in Himachal 1 day earlier, and I took a train and landed up in Delhi. And they said, listen, if you got to do chemical engineering, you've got to come to Madras, and that's how I landed up in Madras. Having landed up in Madras, what did happen was I fell unwell, and I went to the doctor, and he said, how are things? And I said, listen, I'm not too happy, I'm not feeling well, I am going home. So this was unheard of, and therefore they thought I was being dragged very badly, which was fortunately not the case in my case. The director heard about it, there's some student planning to go back, and I had written in those days there were no telephones, and I written a letter to my father, I am coming back. And for next 10 days, he would go to the bus stand every day thinking that I would land up in that bus. But these guys, therefore, decided to convince me to stay, and maybe I was just too lazy to anyway pack my luggage and go, and I stayed back there for the next 5 years, and that was it. There was nothing great about my IIT education. I was an average student. But there was one particular year in which must I thank all the authorities in IIT for it. And it was in my 3rd year. My brother was getting married, and therefore I had to miss one exam, and I think the subject was kind of. I apparently did very badly in that particular subject because I missed one exam, and therefore my marks were not sufficient. I was fortunate, I didn't know I got passed, and I moved to the 4th year. A fellow student of mine who failed that year told me, listen, you were one mark short that particular year, and we had the authorities decided to give you that 1 mark extra as a grace mark, and therefore I passed out in 5 years. That changed my life. So thank you very much, everybody in IIT, for giving me that 1 grace mark. So thank you very, very much. So I was a very average student. I'll tell you how average I was. In a class of 40, my rank was 20th. That's how average I was. Okay.
Don't forget to like and subscribe. Don't forget